Hello and welcome to Macro Mondays here on Landy's Crypto Corner. Today is June 24th, 2024, and today is going to be a bit of a different video. We are going to be looking at the daily first, but then we're going to move into some of the more macro picture, that being the weekly, monthly, 2-month, 3-month, and maybe even look at the 6-month. But here I'm going to lay out the bull case versus the bear case. Now, many in this particular market, particularly on the crypto YouTube and crypto X or Twitter side of things, are calling this bull market over. And I think they're a little premature, but they do have a base case that they're working off of that could potentially come to fruition. I'm of the opinion that Bitcoin is in a bull market until we see specific conditions actually met to enter a bear market, and that being a distribution top. And quite frankly, we're not there yet. Is it starting to paint a distribution on the daily? Yes. Is it there on some of the other time frames? In my personal opinion, I'm going to show you no. And, but there is a legitimate case that the bears have. So I'm going to lay out both cases here to the best of my ability. I might seem a little all over the place, but give me some time to pull it together for you. We're going to start with the daily here and just kind of recap where Bitcoin is currently. And, note that, Bitcoin has essentially hit the majority of the downside targets that we spoke of in the last video. That was last Friday's video. I had mentioned, $64,000 to $65,000. After Bitcoin lost this first major lower high in this range, that was holding up the actual lows here before the double top up here at $72,000. We had the big expansion up. We had some higher low structure. Yes, there was some lower lows in here as it related to the all-time high, but it was higher low structure with lower high, higher high in it. And it wasn't until we saw the rejection there that we were looking for a consolidation to a correction, and we did get a lower low to the first big lower high, and this was at 67,272. Now, this is very relevant here because after Bitcoin went down and made a subsequent lower low, we had another lower high, then the higher low, higher highs, and then we saw the consolidation lows were put in right on this 62,272 high. It did wick down, of course, into the 66 or the upper $66,000 area. So on the way back down, we were identifying that area as being the area to hold. If it did break down, you saw that it broke down. It tried to hold itself with a nice order block candle there on the daily, lost it. So the next area we were looking for was around 65.5 to the prior market cycle, the first all-time high that was put in April of 2021 at $65,000, and then down to the next lower high of this move down, and that was at $64,000. Below there, we were looking for the top side of the higher low structure to get ran at $63.5 to $63,000. Bitcoin did try to save itself right there, and it did not. And yesterday's candle, it hit the next big criteria to the downside. From there, where were we looking? Right to the actual higher low structure. And pit stops along the way at the $62.5, $62,000 level did occur. It quickly lost those intraday and then ran the actual low and lower. So we have a lower low close as it relates to that that higher low of the prior uptrend that got the prior uptrend started at 60,800. That was lost, but the wick low on a closing basis has not been lost yet, and that's at 60,150. So the bulls did manage to save themselves ever so slightly on a closing basis, but price was dropped. Where were we looking for price to head from there? Well, right to the March of 2021 monthly and quarterly closing highs at $58,800 to $59,000. Did swing below there and got front run at that lower low, which was the next criteria. It got front ran above there by $100. This wick low is now coming in at $58,400 or so. That close open on the lower low, which is only a lower low deviation of this monthly quarterly area from March of 2021 on the daily and 2-day chart, not any higher term time frames. So this is going to come into play with some of the things I'm going to talk about in a moment. But it did get front run, as well as we did not see a daily close below 60,150 as of yet. This is now, we got expansion into support, and upon losing 63 and a half, I had mentioned that, it was right around the median of this overall range at that point when it was holding up on Friday here, right around that area, and did just tag around 63.5. Well, if it lost it and started to get below the lower second, I had mentioned that we're going to start seeing aggressive expansion of BBWP, not just the Bollinger Bands, into support. And that's what we saw. And this is ongoing now. So this is active. This is an active setup, but it is at some extremes that I'll point out here in just a moment. One, it's at a major, major support level. So that does mean that if this support level is lost, I'm looking for the lower low to get ran down to the actual wick lows here at the swing low at 56,500. Anywhere below there, I could entertain, and you'll see that there is some areas of interest down there for a potential swing of this, and then a buyback at around the mid $50,000 region, around $55,000 or so, maybe slightly under at 54, to deviate this lower low. But if we see any closes below, then I would be looking for price to head down to the next big area, that being the September of 2021 weekly swing high. This is where Bitcoin had found prior resistance on the initial run up back here in February at $53,000, spiked it nearly to a T, and then found support at the close open highs from August and December of 2021, respectively, at around $50,000. So 50,000 to 53 would be the next major area that I would be looking for. And quite honestly, this is where I would start to entertain a longer form reaccumulation, is on any closes below 56,500 that don't just swing that area in the mid 50s and then come back up and reclaim that March monthly and quarterly at 58.8 to 59, and then subsequently move on to reclaim the 61,350 October monthly close. So the criteria would be, if it does swing that low, it needs to get back above and start closing dailies back in this March at 58.8 to 59 to the top side of the monthly closing zone from the prior cycle all-time high area on a closing basis at that 61,350. That's what would need to happen for this to be a valid sweep of this lower low, and then a move on and likely take out the top side and move on with the rest of the bull market. But if it did breach down below this area and start digging into the $50,000 area, that would open up some further downside into that 53 to 50, and maybe even potentially the big monthly zone, because you're losing one big monthly quarterly, potentially $47,000 down there to 45.5, which was, of course, this big area of resistance prior to moving through and retesting on the daily, and then moving on to those weeklies and retesting them as support, so on and so forth. So that would be the big reaccumulation risk for the bulls from here. Now, that is the bearish scenario with some downside risk. What do the bulls need to do from here if this is going to turn into a low? Well, there's a few things that point to this being at extremes, but I'm going to point out the price action first. So right now, in terms of this move down, and we can get rid of the Bollinger Bands in this case. We'll turn them back on in just a moment. But in terms of this move down, this downtrend is not going to be broken on a closing basis until we see closes back above 67,274, which I will remind you, 67,272 is the area. This was the first major lower high of this zone that I just pointed out a few moments ago, that Bitcoin, was holding up at in the most recent higher low structure of the previous trend before failing. It needed to hold that area. Well, that's the area it rejected. That's also where it put in the closing high. The rest has just been continuation. Yes, there is a swing low to swing high here at 66,455, 66.5. That's not the one that's interesting to me to break the downtrend. It is the closing high area here, which is at 66,630 with the wick high at 67,274. So right now, what the bulls would need to do is to break the downtrend would be go and take out that 67,274. I don't know if they have the ability to do that with the Bollinger Band setup right now. So realistically, what would the bulls need to do and what would I foresee playing out. Let's say that this is the low. They would need to come up and maybe make like a lower high somewhere around, $64,000, come higher low, and then take out that lower high to then form that uptrend. Okay. That's essentially what I would be looking for from here. And I'm going to show you why this area might be a likely candidate, provided Bitcoin does not lose 60,150 and test lower on a closing basis. That is because of where we have a regular stochastic. And I want to zoom out here, and this does mean that I'm going to get rid of support and resistance on this chart, and we are going to throw on this group here. Now I have identified this extreme oversold zone a few times here in the past. And the most recent time that I identified this extreme oversold zone and Bitcoin approaching it, because it's right there right now, was back here in January. Now, January was this far in the oversold zone on, guess what? The big ETF spike up and then the big spike down. So we had the run up in the prior to the ETFs, with the ETF launch rather, and then the big sell off into that major low. This was also in the extreme area of the oversold zone. We can see that we're even more oversold than that right now, with the potential to cross up on any daily closes above 59,600 now. That does not rule out that Bitcoin doesn't hang out in the oversold zone. Another thing that I want to point out here is Bitcoin typically has, because this is a regular Stoch, not a Stoch RSI, this is measuring close over close price momentum, not the velocity of RSI or the speed at which the rate of RSI is changing. This is measuring close over close price momentum, which does mean that it's usually its biggest moves come in the overbought and oversold zones. And the biggest move came in the oversold zone here. So, that was the 16th, 17th of this month, which if you compare that to price action, which I got to go zoom back up here, that was right around $65,000 when I entered the oversold zone. 65,200 on the close or something like that, 65,150 on the close. And then upon losing that and entering the oversold zone completely is where we've seen the biggest move so far. And that doesn't rule out that there's still residual continuation, as noted by the Bollinger Bands here. This is in full-on expansion, and as long as Bitcoin is living below, the lower first, this is going to get continuation of that expansion. Lower first is right now at 63,350. So note that. That's also, guess what? That's also the breakdown below the wick lows over here. So when we saw that area close below on Sunday, well, that started to kick off the actual move down into Monday. So, remaining below that lower first, that's the area that needs to be recovered. Also, to get slightly above there, 64.5 is where we would need to see a low set. But this is in an extreme zone. So if we go back and look at the time prior to this spike down, which was right into a monthly support, which I do want to call out with support and resistance here, this extreme level, we can take the Bollinger Bands off for a moment here. This extreme level was right into we're going to move this out of the way. It was directly on the January of 2022 monthly, where it had previously found resistance back here in November of 2023, moved up to the next monthly zone. That was that $45,500 to $47,000 that I just spoke of a moment ago. It came back and retested right there into that January of 2022 monthly close. My apologies. And right at 38.5, nearly to, I think it was 38.501. Yep. And the actual, the January monthly closing area was at 38.491. So basically right on it. Now the time before that we saw things extremely oversold like this was not even in, it got close, not even in this accumulation period between 31.8 and the $25,000 level, which I'm going to show you in a moment, is the actual monthly, the last monthly high or low. So in this case, what we're looking at here is the last big oversold zone spike that I have identified here. Prior to that one is basically right where Bitcoin's at now. And this was when Bitcoin had just broken out off of the lows and began to try for an uptrend. And then it had its lower low on divergence. And it retested. Basically, we were getting rejected from this accumulation over here on the low side here. So about that 18.3 to 18.5 from the lows. Had the breakdown, retest, went back in, had equal lows down here. Paused for a moment at the breakdown high, moved through that, retested that breakdown high, and then came back and tested the actual consolidation. It had rejected on the lows, rejected the consolidation lows, and then found those consolidation highs as support over here. That was the last big time. The only other times that we've seen Bitcoin get this low in the oversold zone for Stoke were in the bear market. So this is all the way through the bear market and provided for, this looks small, but provided for some pretty good bounces up. Of course, they got sold into pretty significantly, but they at least resulted in fairly good bounces to the upside. So it is in very bouncy territory, right around a major support level. So where is the further risk to the downside on some of the longer term timeframes, and what is this case that the bears have? Well, the bull case is it's got to put in a low somewhere around where it's at right now to prevent falling further and turning very bearish, right? And at minimum, I'd be looking for it to turn bearish and go into a reaccumulation somewhere around the 50 to 53. Maybe you get a one shot down to the 47 level. I'm going to show you why anything below where price is right now is, in my personal opinion, of course, not financial advice, opportunity. I'm going to show you why in just a moment, but let's get into some of the higher term timeframes, and that is going to be the weekly here. We're going to get rid of the oversold Stoke example on the daily for at minimum. What we're looking for is basically a bounce that then, of course, can turn into something else. But we're looking at this weekly, and the weekly setup is bearish right now, but it is not invalidating the bull thesis for the market, and I'll show you that on even higher term timeframes than the weekly. But it could result in in a larger reaccumulation structure, and I'm going to show you why as soon as I get rid of this. And we'll just look at the pure price action right now. So we're going to go back in history, and we're going to note a few things. Whenever we start seeing lower highs come in, we have higher highs through here. Lower high takes out the higher low, goes in and it takes out this higher low in the weekly. Technically speaking, this was the higher low. When this gets taken out, this wasn't really a complete higher low. We had higher highs through here. We technically had a higher low swing that gets taken out here on the weekly, and then the next higher low gets taken out, moves right down into test the actual nice higher low structure prior to putting in the higher highs, and went into a reaccumulation period, specifically a Wyckoff reaccumulation on the daily, hit the spring somewhere in here, and then went up, came back down for a higher low retest of the breakout, and then moved on to higher highs, slightly higher highs on a close and a wick basis, of course, and then cycle complete. Once we saw the breakdown below, $53,000 or so, that's when we were like, okay, this is done. Then it was just step it down one step at a time, and then lose this, and then it's down and it's over. We're in a bear market. Now, the danger here for the bulls is that this could turn into a redistribution structure. So as it currently stands on the weekly, we'll throw a swing indicator on here. It's just a random one I picked up for free in the indicator section. But you can see that we have, we had a weekly downtrend back here just, before we really confirmed bull market start. And we are in higher low structure, lower low, where we had a downtrend on the weekly, big downtrend break, and now what we'd be looking for is a higher low to form on the weekly. So that would be the bullish scenario, right? So on a swing basis, we had the downtrend on the weekly, the big trend break up on the weekly, in terms of, swing basis, not necessarily a closing basis, because this is a closing lower high as it relates to this lower high over here. But on a swing basis, where we'd be looking for higher low and then, take out the most recent high, get that weekly uptrend rolling again. The danger for the bulls is the 56,500 on weekly closes. That's going to lock in this lower high on a closed structure and lower high structure overall as it relates to the higher highs over here, not just the downtrending swings. Because of the closing structure up here being a closing higher high and then this being a closing lower high, if it takes out the higher low here on the weekly as it relates to a closing structure, because if we get rid of the swing structure, you look at this and we've got essentially, we have closing from the closes, we've got this going on here. And if it takes out this higher low, then we have a lower low. And what are we looking for from there? We would be looking for a potential lower high in the weekly. And then when this lower low gets taken out, you're looking at distribution. So that would be a weekly distribution as opposed to a daily distribution. So, daily distribution likely to result in a weekly distribution. So realistically, you don't want to see daily, weekly closures really anywhere below the last close here, to be quite honest. It's going to be extremely bearish and looking for a longer term correction. Again, I'm going to show you why I don't think it's bear market on, although the odds increase. But closes lower than 61,450 on the weekly, not going to look great. At minimum, the weekly would be looking to retest down to the actual wick lows, and if it loses it, even if it bounces, you're looking for lower highs. That doesn't mean you're going to get it, but you're looking for lower highs, and then you're looking for weekly distribution from there. And that's not, the conditions haven't been met for that. So bears, don't get too excited just yet. I think it's a little premature to be excited about it. But there is a case to be made there that if that does occur, and especially on any weekly closes below 56,500, that would begin to start to paint that picture. I do believe that we would go into a longer form reaccumulation, but there's a few things that need to be addressed there. First off, monthly structure. Just looking at the chart here, you can see the clear downtrend, from the prior cycle bear market, right? So we've got the downtrending structure here to what? The uptrending structure. And where is the last confirmed higher low on a close? It's actually $25,000. This area here is a consolidation high. The reason why it's not a higher low outside of a swing basis, which I just showed you on the weekly, it's a swing basis. We're only looking at it as a swing higher low structure on the monthly, because we haven't set a closing higher low. The only way to set a closing higher low would be get this swing high in at 73,835 to swing low at that 56,500. And then you see where the closes are. We got to get a close back above the 71,300 to set this as a higher low. Otherwise, the last higher low is down here at $25,000 on that swing. Would it be a swing break? Yes. But then I'd just be looking again for more of a reaccumulation and corrective structure on the daily, weekly timeframes, likely to last a while. Now, the other thing to note here is where things are on the monthly. We are, 5 days and 22 hours out from a monthly close, which is also going to be a quarterly close, a 2-month close, and a 6-month close. So you got a 2-month, the big quarterly close, and then the 6-month close as well. And this upper first standard deviation could become that daily swing area that I was talking about as it currently stands. Only valid if Bitcoin can close back above 56,500 at this low. But if Bitcoin does come down to the upper first before the end of the week, this is, possibly an area as long as it's closing back above 56,500 and then regaining that 58.8 to 61,350 area on a close, then this could be considered upper first tagged on the monthly during an expansive phase. This is currently coming in at $54,000. You can call it 54 to 55 because it is oscillating ever so slightly by a couple $100 here and there on the monthly time frame because of the way that Bitcoin is trading. This is likely going to move up if Bitcoin hangs out in this consolidation sideways range. And that would be, likely in and around this low side structure where Bitcoin is currently, somewhere around the $56,000 to $58,000 region is where that upper first is going to come in, which means it's perfectly safe to tag and move on from Bitcoin. I'm not going to show it right now, but Bitcoin typically, I'll show it when I do the monthly quarterly close video. Bitcoin typically uses that area as support anyway. Now, the other big thing to note is going to be the weeklies, where there's a little bit of a exercise caution on both sides of the equation thing here. Now, the weeklies is where people are getting really nervous because it's lost on a closing basis. Bitcoin lost the 20. Now, there is context to be had here, though. Bitcoin did lose the 20 simple, which is the basis band of the Bollinger Bands here. But it lost it in the context of this big expansion to the upside with no real break in between. And this is going into a compression phase. So Bollinger Bands are currently in a compression phase, very low volatility. Tagging the lower first standard deviation of the Bollinger Bands is perfectly normal. After a big move up, you get sideways price action right into the compression, and then you start seeing that basis to lower first area be tagged in the context of support within a range. But if 56,500 is lost, the lower second becomes the target. Where's the lower second? Hey, that's right where that monthly was by the upper first that I just showed you at around 54,000, in this case 54,500. We do not want to see closes below there, because then this compression, this is where bears get the point, and start to push things into a wider reaccumulation, because this would be an expansion at that point into the downside supports at that $50,000 to $53,000 area. That's that daily stutter step this year. That's that the swing high from 2021 on the weekly at 53 to those August and December closes that Bitcoin held up at earlier this year. That'd be the next viable area to be looking at, because I would look for a price replace band by the lower third, somewhere around $50,000 to $53,000, and a longer form reaccumulation. If we got any further expansion below there, that's where we start to have to entertain, some further downside price action. Now, a big counterpoint to all of that bearishness would be, again, this is a compression. Bitcoin in a compression like this, I'm not worried about it. If this was already expanding down and starting to push into the lows, if it broke the lows and lower, then we're looking at expansion. Probably, things are over for the bulls for a while in terms of reaccumulation. This right now is still presenting opportunity for the bulls. And there's a few reasons why. In addition to the daily being in a pretty extreme zone, where it has historically bounced in the context of the bull market, as we've seen in this cycle, we are still inside the range. We're at a major support, that monthly quarterly zone that I showed you early on. In addition, the weekly is, looking to lose the bullish control zone. That's not very bullish, right? 5-day is also looking for expansion to the downside. It's not set in stone just yet. It is pushing that lower second standard deviation, which if it starts to expand, then we are looking to that low and possibly lower, and that to lead into that weekly. But because that weekly is in compression, and we see that, the 4-day is in a range, this is the lower second, typically reversing around the upper second, and lower second starts close below and then close below the wick low, then we're looking for a reaccumulation period, a distribution to reaccumulation and then we come back to it on the daily. If it turns into a big bounce to redistribution in the weekly, or distribution on the weekly with a lower high, then we entertain a really long form reaccumulation. And some would probably call it a bear market. I don't believe, I'm going to show you why I don't believe it would be a bear market. But this is also lower second on the 3-day, which is in a big range, upper second, upper thirds by 72, 700. The lower seconds right around the lows here at that 58, 500 got tagged. The 2-day is getting expansion, very big expansion below. So again, bearish right now. 2-day did close below the actual higher low. Didn't close below the wick, just like the daily. But on the daily here, something that you need to note and understand is Bitcoin production cost, which is fundamental analysis. So we're going to get into a little bit of fundamental analysis, and then we'll probably wrap this up. Bitcoin post-halving has almost always tagged its basis cost, or the floor cost, to produce Bitcoin. This is the absolute lowest cost to produce Bitcoin, and almost no miners operate at this cost. There's somewhere where this green line is. That's a rough estimation, around $68,000 to produce a Bitcoin. $60,000 is the floor cost. That is basically just the electricity cost to produce Bitcoin, and that's in the most favorable of conditions. I can tell you from experience, as someone who operates miners, this is not realistic for the actual cost. But post-halving is the time period when you do see Bitcoin trade below it. I mean, that is something that does occur, and even close below it. So Bitcoin spiking into production cost is not out of the norm. It getting below and closing below post-halving is not out of the norm. Going significantly below production cost would be out of the norm. So for instance, coming down to for the $50,000 without getting immediately picked up. So this is $50,000 right here. This was basically the ceiling cost to produce a Bitcoin prior to the halving. Again, this lens confluence to 50 to 53 at 56,500, mid 50s just gets swung. It doesn't get swung, but gets closed below. This is the next viable area. But I would expect Bitcoin to pick itself up pretty quickly from there in a daily reaccumulation that doesn't lead into a weekly reaccumulation. It all depends on the closes and the timing. We are coming into the end of the month, the end of the 2-month quarterly, so on and so forth, that I will end with. But my big counterpoint to that is the only times that you see Bitcoin trading around production cost and below it, just post-halving, or we look back here, this is right at the bear market bottom is where we got closes below it. And just prior to that was the 17,500 spike below, no close below. So the closes below came in at the very bottom of the bear market. The time before that, well, guess what? It was just post-halving. And Bitcoin, by the way, hung out in this area for quite a while. So we had the halving come in. Bitcoin, the halving actually came in. This data runs about a week or two behind. The halving comes in. Bitcoin does spike below it and trade below it for a couple of closes here, and then goes sideways. Now, the reason why you see this step down, this is because the hash rate did fall. And I will note that hash rate is falling right now in terms of difficulty. So the hash rate itself isn't, I'm sorry, so let me correct that. The hash rate difficulty is falling, which does lower the floor, but you see it stayed where the previous floor was, went sideways, and then moved down with the bull market into end of 2020, 2021, and so on and so forth. The time before that it traded below, the actual spike low on the what many call the black swan event, that wasn't actually a black swan event. It was very clearly a weekly downtrend, something I'll get into another time. Didn't even close below on that one. Next area that we saw it down around cost production, where it did actually trade below because of the actual the difficulty adjustment down was we saw it spike into it on right around the bear market lows, just above at 34.65. It did get a difficulty adjustment down and then ran to the lower lows there just above $3,000. And then kind of came back to where it previously was. We saw that that the difficulty adjustment kind of worked its way up from there. But this is to say that in and around production cost and below it, you're not going to get a much better buy, to be quite honest. Not financial advice, but the one thing that you will note is that, it doesn't sit below production cost, the floor for production cost, for very long or very often. So what would be abnormal would be getting below production cost for an extended period of time. Is it fair to say that it could come down to the 50 to 53 level, maybe even spike the monthly on a wick basis or something on an extreme move, which was at 47,000, maybe 45.5? Sure. Not out of the question. I would not expect to see any prolonged closures below there, because what would happen if Bitcoin traded consistently and closed below the absolute floor of production cost? Well, you would see miners going out of business. So we would have a big fundamental shift in the market. And that likely would lead to, that likely would lead to a bear market, like a premature bear market for Bitcoin. And there's people who do believe that that's what's going to happen. And fair enough. I don't see the financial incentive for that to happen, though. As somebody, this is anecdotal because I can't show you a chart for it, but as somebody who is a miner and has miners in facilities, it just doesn't make any financial sense to do that. For the miners or for any of the players that would want to consolidate the smaller operations that would go out of business, just doesn't make financial sense to me, when there's far more upside opportunity and money to be made from that upside opportunity. So understand where Bitcoin is and what the fundamental is versus what the chart is potentially painting on the weeklies, because you're going to get a lot of like bull market support bands broken, which is a bunch of bullshit. That same person, by the way, that was calling the bull market support band broken at $25,000, by the way, which is just a 20/21 cross, just so you know, which is the simplest of freaking technical analysis. You know who I'm talking about, by the way, for those of you out there. If you don't know, don't worry about it. But that same person, just so you understand, back in, and I do want to, I'm pointing this out for a couple people in particular that had mentioned this, and this is not a knock on you or anyone else. This is just to illustrate a point about this. There is a 9 on here, but just bear with me for a moment. Back here, and let's go ahead and modify this indicator real quick to take the Bollinger Bands off. We'll get the, we'll get rid of the 9 EMA. By the way, if you want to get this indicator, it's free. It's in the link in my profile. It is a private indicator, but it's as long as you have the link, you can add it to your chart. It will be public soon. I just haven't updated it to where I want it to be at this particular moment. Once it is fully updated, it'll be publicly searchable in the indicators tab. But for now, it's something that you can grab in my profile or the link in the video description. And let me actually modify this. This is this needs to be a 20 SMA. There we go. So the weekly bull market support band, the same person that is the big purveyor of this bull market support band, which is just the yellow is the 21, and you want it leading the 20. It is a faster moving average, even though it is a higher look back. In this case, it's bull market's on, and then when it shifted like this and got under, this same person was telling you that this was all going to fall apart. It was going to take out the lows and go to like 12K because that was their targets. They were wrong, because this is not how you should be doing technical analysis just by using simple moving averages. Things are getting far more complex in Bitcoin. This might have worked at one point in its history. it's not going to continue to work consistently. It can give you an edge in some cases, but it has to be taken with confluent indications in the market. And in this case, if we don't see any closes below 56,500 on the weekly, it does not matter. It doesn't matter. Nine is still showing up there. Why? Oh, it's just the label. But yeah, it's not great. But as long as this closes, in or around the EMA, 21 EMA, and then pops back up above the 20 simple, which is the basis band of the Bollinger Bands, that, of course, I noted was the big word of compression on the weekly when it comes to the Bollinger Bands. So if I just do this and throw the Bollinger Bands back on, you see that the 21 EMA is just above the lower first. It got tagged inside of a compression. The basis is the 20. So as long as it's holding around this area and pops back up, it's fine. If it starts closing below 56,500, yes. I still wouldn't say bull market over, though, because of the fundamental analysis for cost production. And I will leave you with something else, and that is that when we look at a few other things here, we're going to throw on some EMAs with my Bollinger Bands. We'll even throw on the 200 EMA and SMA down here for all of the moving average folks. And, where the next big area to look at, even if this did fall apart, 55 is coming in right there at $50,000. So again, confluent area. But if we look at the monthly, 54.5 still gives room, and trending above the 9 EMA, exactly where the upper first is on the Bollinger Bands for the monthly, keeps this in expansive territory. Still looks good. Bull market's still on. Reaccumulation in and around this area that wicks below is great. Closes below are where things are starting to look a little hairy for the bulls. And we got a 2-month. And if you look at the 2-month is coming in the top side of the areas that I've been calling out, 53 to 50. This is actually coming in just shy of $54,000 by the upper first. And this hasn't even really kicked off its expansion yet of the Bollinger Bands. It's only started. So you see the dip there, and you see the ever so slight expansion here. Bottomed out on its 55. The 21 is about to cross up over the basis band with the 9 EMA leading. It's above the upper first. This is bullish, not bearish. If it loses it, it could come down significantly on the 2-month. Again, I'd be looking for a longer form reaccumulation. This is at that $45,500 to $47,000 area. Likely gets front run around that 50 to 53 and goes into a daily reaccumulation. Only if it starts to break down in structure on the weekly do I look for a much longer form reaccumulation. Even then, I still believe bull market is on because of the monthly. Or the quarterly, rather. I just looked at the monthly and then the 2-month. Quarterly upper first, as long as you're above here, bull market's on. And that is 49,600. So as long as it's above here for the next 5 days and 22 hours, very good. This is likely going to move up somewhere locally, can be swung very easily. 9 EMA is leading the 21. 21 is leading the basis still, even though we had a big old dip into it during the bear market. But this is where, towards the quarterly close and after, I'm going to talk about why this is all one big structure, but that's a topic for another day. Above here looks good. You do want to see it above the upper second to get continuation, obviously, and that's at 68,500. So if by the end of the week it does that, it's looking great for up and away. And I do want to note a few things in conjunction with that. I would be looking for a bullish reset on momentum for the monthly. This turned down from March coming into April. So we saw the cross down and then the continuation from April into the May. And now we're looking at this still. Excuse me. I'm trying to prevent a sneeze there. We're looking at 65, 900, almost 66K to turn this back up. I don't know if this is going to come down in terms of its pivot number at the end of the month, but we'll talk about it closer to the end of the week and then after the monthly, 2-month, quarterly, and 6-month closes. But if you look at the 2-month, the pivot's all the way at 28,500. Look at the 3-month, there is a little bit of a disagreement there. Let's get some more history by going to the index. I'm on the index. 3-month is at $34,000. And the 6-month Very, very short history, but $47,000. You don't want to see closes below there. But this is going to close and likely that number is going to pivot lower because we're just going to be getting that cross for the first time or second time in its history. And the first time was in July of 2020. So see that we saw the first cross. This will be the second cross in its 6-month history. It does matter. It's not a lot of history, but it does matter. So even a longer form correction, even if the bears get what they want and they get a longer form correction, and they get significantly below production costs for an extended period of time, even if that happens, I don't see things dumping out much lower than $45,500 to $47,000, and I think that that's a lot of hopium for the bears. If anything, we're looking for daily reaccumulation outside of the range lows into that 50 to 53. Also wanted to note real quick here, and I'll leave you with this. Bitcoin is right around its 200 EMA on the daily time frame. It is getting expansion into that area. It's likely that it could test down a little bit lower on this particular move. Maybe shorter term time frame bounces. Again, you can see 9 EMAs right there where the lower first of the Bollinger Bands is. So 63.3, 63.5 area does need to be recovered to start pushing up. And I personally want to see lower highs like I pointed out earlier, and then a higher low that breaks that lower high, not having to go all the way up here and all the tangled mess up there against trend, against momentum, and take out 67,272. You want to see a bounce up, lower high, higher low. It's way out of here. 200s are right on the bottom side of the daily. So if that area gets lost, then we start entertaining that bearish reaccumulation. So I'm going to leave you with that. I probably missed a lot of things that I wanted to talk about. So I'm going to leave it to you to ask me questions. I know I was all over the place. I hope I illustrated my points, that yes, there is a bearish case to be made. There is a bullish case still in play, obviously, and will remain in play. I don't think that the bull market is over. And even if the bearish case does play out, I'm still not in favor on the longer term time frames of the bull market being over. I think this is a much bigger structure at that point. We go into a reaccumulation and we come back to it later. And I think the longer it consolidates, and even if it goes into a deeper reaccumulation period, that that means we're going to see much, much higher targets than I've estimated around $150,000 as like a cycle top in the past, and this is something I'm going to talk about later this week. Significant resistance above this current range, provided it holds and doesn't go into a daily distribution into a reaccumulation. Above 73.835, I'm looking, 75, 78, 78 to 80, the mid to low 80s, and come back to it because I would be anticipating larger corrections there. And then, then we start looking to, 90 to 100 and then above. So that's where I'm going to leave it. There is some fundamental stuff that I'm going to get into later this week as well. This is going to be a longer form video the week, probably all week. And then we'll come back to, shorter form videos next week after the major time frame closes. So bear with me this week. I hope that this lays out the criteria for the daily. As long as Bitcoin's closing the dailies above 60,150, which is the closing wick, the wick low right here of the higher low, then it's preserving its chance to, of course, keep testing down. But I wouldn't be looking for it to significantly go and test this low and lower at that 58,300 to 56,500 area. Although wicks are permitted. And if you start seeing it trade below yesterday's wick low at 58, 58, 450, 58,500. If it starts trading below there, we're probably looking at that area getting run and possibly a scenario of it getting swung. Referred to earlier in the video for my thoughts on that. Other than that, you have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. And with all of that being said, Landy out. Take care.